Hello everybody and welcome to the midweek market update from Smack the Markets for the 1st of April. So this week was always going to be a challenging week for the markets. It's the turn of a quarter, and well, not just the turn of any quarter, it's the turn of probably the biggest quarter that we've seen in recent history. Last quarter has been the worst quarter for many markets in recent times. We've also seen, of course, this week being the week after last week, and that means that there was huge amounts of stimulus being ploughed into world economies and also the markets last week, and the investors have had time to digest that over the weekend. And not to mention that coming on Friday, we've got the non-farm payroll numbers, which is, well, traditionally the biggest market moving piece of news on the data slate, well, at least in the sort of old world sense. So quite a lot going on in the markets this week. We've already seen a bit of interesting price action, and we started seeing a bit of movement coming through into some of the markets now. So let's take a look at how the markets fared that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we come and take a look at the Dow first of all, and probably if you take a look at this on the 4-hour time frame. On Monday, we were favoring lower prices here on the market. We're looking for the market to roll over, rebound, and start its sort of run to the second run to the short side. We're not sort of really convinced that the sort of V-shaped recovery that many sort of politicians are sort of wishing for and hoping for is likely to sort of play out in this sense. Normally in sort of the experience I've seen in the markets, you see that V-shaped recoveries are normally when there's been a mistake in the market. Fat finger, scenarios are typical. What we're seeing at the moment, of course, is no way any kind of mistake. There has been huge change to sort of world economies and the mechanics that actually run the markets as well. So we're likely to see some further weaker prices here in world markets, particularly in world indices like the Dow and many other US indices. So at the moment, even here on the 4-hour time frame, what we've seen is a bit of a recovery here in early week for the market to put in sort of a famously what was termed here as a double top. And we've got a double top with divergence. So the second top up here, where the market's really tried for a few times here to get through and to make new highs, it's failed to do that. And at the same time, we've got lower momentum, weaker momentum coming into the markets on that test. So the market's rolled over here. It's broken through 22,000, or the sort of more precise level I have in there is around 21,900. So we broke through that level yesterday, and the market sort of declined down to the next trading window, or filled the next trading window down to 21,118. And you know that this level has been marked in my charts here for some time. It's been a level where the market's sort of established support and resistance, even when we had the most volatile times and 1,000 pip moves in a day, when the market was hitting some of its extreme volatility. So currently the market's sitting at this price point. It's also at the point here of a new trading window to the short side, which brings it down to 20. So that's 1,100 pips here to the short side. Below that, there's the next trading window down here to 19. Now, at the moment, the way I'm looking at this here is we've got a key decision point. If the market can find support here, then we may well see a retest of 21,900 today. If we don't, if the market sort of breaks through here, and let's face it, the sort of strength of momentum at the moment is to the weaker side. We've got weak momentum on these higher time frames and lower time frame trends short. Then again, any more sort of weakness here clearing through this level, we could be looking for that sort of 20 level to be retested in the near term. Now, of course, I mentioned that we've got non-farm payroll numbers coming out on Friday. That's, again, typically one of the big market moving pieces of news, and it does tend to impact on this market as well as many other markets. That number, I don't know what it's going to be, but it's unlikely in the whole scheme of things to be particularly sort of wonderful. Now, we also looked at silver on Monday, and we also looked at silver short. The level that we were looking at was this sort of level here on the 4-hour time frame. You can see that the market, before we go there, perhaps if we just remind ourselves, the market was finding resistance up here around that sort of $15 level, and we got that sort of weakness started to come back into price action. Again here on the lower time frames, on the 4-hour time frame, we've got the break of this consolidation now. So now that's sort of happened. The market has just sort of consolidated underneath there, but now we're starting to see a bit more weakness here again. And again, we're looking for more weakness as the market breaks through this consolidation here to the short side again. Ultimate target, if we can do this, if we can get a further break of this level and further break of this consolidation, we're looking for moves down here towards that sort of 13,200 sort of area. Now, if we take a look at dollar yen, we mentioned dollar yen on Monday. Again, we were looking for weaker prices on dollar yen as the market sort of took out 108. Now, at the moment, what happened, the market did manage to strengthen, and it's moved up to 108.50, and now we started to see the rollover from here again. It's still rather sort of choppy price action, this that we've seen throughout the beginning of this week, and it's not been particularly sort of easy to trade. So there are other dollar markets that we're looking at for trading opportunities that are looking a lot more clearer than dollar yen. At the moment, what's sort of hampering this as a move is that we've got the strengths and weaknesses in alignment in the same alignment here for the dollar and the Japanese yen. In other words, they're both strong at the moment, and that's really why these markets are just sort of hedging sideways at the moment. Having said that, if we come and take a look at some of the other dollar markets, like Aussie dollar, for example, and Kiwi dollar, these ones do look much more interesting to us at the moment. So the markets here on the mid time frames, the daily time frame, is pulled back into that sort of 62 level. We've now sort of established some clear bearish momentum in here with the bearish doji yesterday, and now we're starting to get a break to the short side here. Just from the context of trends here, there's not a lot of market structure in these markets because they're clear from any recent sort of price action and price history. But what we can see is that just from the context of trends here, there's plenty of distance to the short side on these markets. So we've been looking here to see, I'm waiting for markets to break through this level here on the 4-hour time frame. That's now sort of taken through. And again, we're looking at opportunities short underneath the 61 level to trade Aussie dollar short, and also similar price action here on the Kiwi dollar as well. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.